alert, red alert. Another difficult day in the markets. I think we're here today to talk a little market psychology, which is a fancy way to say human psychology. And the idea that Bitcoin being down in the 80s, and the fact that if we'd have been in the 80s from the 60s, the fear and greed index would be power turboed onto the greed side. But since we were in the 105s to 109s, we're now turbo powered to the fear side. It is really something to behold in a siloed world that is crypto Twitter, to watch Bitcoin be at whatever it is, 84 today. I'm reminded of the tweet that Binance's then CEO CZ put out, I believe, in 2020. And it was as prophetic a tweet as you can have for right now. And he said, "I can't wait for the day when Bitcoin drops or crashes from 110, or I forget what the tweet said, but it was 100 or 110 to 85, and everybody panics." And that's exactly where we are right now. Bitcoin crashing to 83 and change, and the world is coming to an end. It really is something to watch, the psychology of human beings, and the different emotions associated with fear and greed. If you have any doubt, we're, as human beings, when it comes to our own emotions, we have an N of one, right? We have our own emotions and we understand our own emotions. At least we think we do. But if you want a good look at human emotions on a larger scale, and crypto Twitter, the fact that people are losing their minds about Bitcoin in the 80s is really a study in psychology. And it's something to behold. It really is a sight to behold, given where we've been and where we are now. It's a school is in session, and there are. I come back to this thesis time and time and time again. Every single meaningful dip that's ever happened in the last decade associated with Bitcoin's life cycle has been an opportunity for enormous wealth accumulation in the midst of and near the end of that dip. Bitcoin has rocketed higher literally every single time. And so, but it's very, very difficult for people to get their minds and heads around that when their, Bitcoin portfolio is down 25%. Oh, the horror.
I just think it's, when something goes up 100% in a year,
Mhm.
you kind of have to expect that it's going to have to come back down and retrace and retest what used to be resistance as support. Like, it's amazing to me how charts don't lie. Charts are like the heartbeat of the patient being graphed out in the hospital. And, it just is what it is. And there are things that can be catalysts that can, cause patterns to be violated. But more often than not, left to human behavior, those charts are just indicators of that emotion that you're talking about. And if somebody got in at 105, they're panicking right now because they're down 20+%. But if somebody got in at 50, they're in a different mind state. They're panicking because they don't want to give up their last 20 of profits. And everybody's tested at a different, level based upon what your cost basis is. And the thing that's common to everybody is we know no one knows when it's going to stop,
Yeah.
and that's where the fear goes, and that's where these cascading events happen as people start panicking, thinking it's going to go to zero. But therein lies the opportunity. Like, it reminds me of all the things that Michael Saylor talks about in terms of like volatility is the gift.
Yeah.
It is the present to you. Because if it wasn't volatile, there would be no opportunity. Like, they go hand in hand, volatility and opportunity. So it's just a matter of harnessing your own emotions and realizing that these opportunities are teaching moments. If you find yourself with no cash to put in to Bitcoin, then you were over allocated when you first got in. And these dips are painful because you're not a buyer. But if you believe in Bitcoin and you believe that, Citadel announcing that they were going to be a market maker is probably a pretty good indication of long-term growth versus today's price movement and the whims of the week, if you will. Then you're looking at this as a discount opportunity, and that you're looking at this as a dip that, yeah, it may not be the lowest dip, but over time, let's just say theoretically that Larry thinks right and it goes somewhere to $500,000.
Mhm.
Are you going to be worried about whether you got it at 84 or 96 or 102? No, those are all the price of entry. That's the volatility that you have to have in terms of where you buy in order to get to prices like 500,000. And 500,000, in my mind a lot less risky to bet that where we are now is going to get to 500,000 than when I first got into Bitcoin, when prices were at $40, betting that they were going to get to 100 grand. You know what I mean? Like,
Yeah.
come on, it's insanity. Like the risk in terms of this being a risk on asset, it's been de-risked to a point where you're kind of going like, I don't know of another more solid 5xer that I can think of.
Well, there's the tweet, right? So if you look at the date on that tweet, it's December 17th, 2020. So CZ, waiting for the new headline, Bitcoin crashes from 101 to 85. Save the tweet. So it's not nearly 5 years ago, but 4.5 years ago, let's call it. CZ was prophetic.
But he was also talking like in so out of today's context.
Yeah.
Back then, that it was meant to be hubris, right? Like that's how I don't know what the price of Bitcoin was back then, but it must have been outrageous to say that it was going to be at 100,000.
Yeah. So it's the point I was making before about if you wanted an understanding of the emotions of fear and greed, and which is more powerful, you're getting a real good feel for that right now in the world of crypto Twitter. Fear is a significantly more powerful emotion than greed. Greed will lead you to make some decisions that you may not have previously thought that you'd make some poor decisions. But fear is something that can overtake all of your emotions and cause you to make decisions that are very, very poor. And it will have you say things, it will have you do things, it will adjust your behavior outside of the bell curve of what your behavior normally is. And that's what we're seeing in the crypto markets at this point. And again, it really that tweet sums it up. Crashes. He was making fun of the fact that traditional media, traditional finance, traditional financial media would be the one writing those headlines. Bitcoin crashes from 101 to 85. The sad thing is that the world of crypto Twitter are the ones running with that narrative, acting like that narrative is something to be concerned of. And a large portion of the folks in crypto Twitter and some of the larger accounts that you'd follow have been here for multiple cycles. So,
well, Andrew, when was that tweet posted?
2020.
And about what date? What month?
December 17th, 2020. December 17th. Okay. So look it up. And so, it is surprising to see sentiment the way that it is with Bitcoin in this position. I guess
so it was at 19,000 to 20,000 range.
Yeah.
And what's crazy about that is in July it was at 9,000 of that same year. So you went from 9,000 to 20,000, and he tweets out, "I can't wait for the day that it's going to drop from 100,000 day." I mean that's a 5x. That's like the distance between that tweet and where we are today is the same distance in price from where we are today to 500K a coin.
Yeah. So if there has ever been a prophetic set of sentences that have ever been said, Tillman Holloway just said them, right? So the difference between the price when CZ tweeted that and the price now, or effectively when we were closer to the highs at around 100, is the difference between where we would be at now and the low end of what Larry Fink said he thinks Bitcoin's going to. And that was a 4-year period for CZ. So think about that. You can put yourself in position, because as I said to start out this podcast, every dip has been for buying for Bitcoin for 10 years. So if the dip was for buying back then when CZ made that sarcastic tweet that was, enormously prophetic, then it's just as prophetic now to make the same kind of tweet. And you're if the same price action holds, then you're looking at a 5x over a 4-year period. Is that something you're interested in? Can I interest you in a 5x? What do I have to do today to put you into a 5x?
Well, I mean, honestly, at 83, it's like a 6x. You're going to get even an extra little bang for your buck because we're down in the 80s versus at the 100 mark.
The last 2 weeks of crypto Twitter reminds me of a Seinfeld episode. It reminds me of the Seinfeld episode where Jerry has gone in to buy a new car and he's buying it from Putty, right? Starts out good. He's going to get the black one, and then things start to go wrong with Putty in the lane. George can't get a candy bar out of the candy machine. And halfway through the show, he's like, the car was black, but now the car's yellow. They don't even know if they have one. He's selling me undercarriage stuff. It's crazy. And then that's where we're at with sentiment right now. That's probably the reality behind negative sentiment. Is there was this expectation that when Trump came into office that there would be this big whoosh to 130 to 150, and there was a whoosh to 109 from the 50s, which again was 100% upside, but it didn't go all the way to 130 or 150. The strategic Bitcoin reserve hasn't happened yet. It's all a matter of perspective. What you just said about CZ's tweet in 2020 and the price action between now and then, it's the exact same price action and percentage based stuff that we would have from here to 500K. It's a really, really great perspective.
Well, it's why people love Bitcoin that are math geeks. Mm-hmm. Because it adheres to adoption curves and power law exceptionally well, to the point where people start thinking it's magic. And, it kind of is. I mean, over a 16-year period, if you track the number of wallets that hold more than $1,000 or more of Bitcoin, mm-hmm. and you track the price of Bitcoin, they are as correlated as any two data points that you could ever want to plot in a power curve. They're so correlated that it's like plus or minus 3% correlation. I mean, it's insane. So here's the way that I like to boil it down to the most simplistic way to convince people that Bitcoin has a lot of upside. There's 7% of the world that's using some sort or has used some sort of digital payment. Mm-hmm. Every bank is now adopting digital payment rails and now are going to be able to hold digital payments. So do you think that in the most recent, bill reform that changed that accounting rule that now allows banks to hold Bitcoin without it being a liability, is that going to drive adoption of a wallet's more than $1,000 or not drive adoption? And, to me, it's just that simple. It's like, do I think more people in the future are going to use Bitcoin than they are today? Yes. Price has to go up. You can't create more supply. So more demand equals price go up in that equation.
Yeah, we're on the precipice of enormous, continued shifts associated with, what I would call is, the real adoption of Bitcoin, and that's access and ownership, right? So if you have, traditional banks that now have the ability to custody Bitcoin and Ethereum, if you have, a stable coin bill that makes its way through Congress, both the House and the Senate, and becomes some version of the law of the land, allowing stablecoin bills to also be part of the processes by which banks can move money, and handle transactions. Just like you said, the amount of wallets that will skyrocket because of just those couple of things are astronomical. It may be the largest uptake in individual wallets that the crypto space has ever seen over the next 24 months. So if that's the case, the AAA plus asset in the space is Bitcoin. That's where people will go to first. Most people can't name another cryptocurrency other than Bitcoin. So the reality is that we're on the precipice of we're dealing with some market psychology, and we're dealing with a downturn in price, but at the same time, the underlying rising of the water associated with the opportunity and the access for folks, that's not slowing down. That isn't slowing down or changing in any material way because Bitcoin's at 103 or because Bitcoin's at 83.
No, it really no bearing at all, and no different than in 2020 when we went from 9,000 in July to 22,000 in December. Moving 100% in this space has been traditionally nothing. So the fact that we've gone up 100% and are now retracing about 30% of that, you can't look at it any differently than any other cycle, to be honest with you.
Yeah, it's so let's talk a little bit more about market and human psychology, and what it means for Bitcoin in the short term. I look at so much of the commentary on crypto Twitter, and who's saying what and why are they saying it and when are they saying it. So we turn to a little bit of news about meme coins. The SEC just came out about 2 hours ago and made it clear that meme coins don't fall under the idea of it being a security. So the reality is that there are not, in the short term, there aren't going to be any guardrails associated with meme coins, and is it a security or not a security? Basically, the SEC came out and said, listen, investors, you're on your own. If you're dumb enough
what's your take on that? Do you agree with that? And I'll give you my take first if you want me to, but
well, it's so there's been an enormous shift in such a tight period of time, right? 3 months ago, we were still under the Gensler regime where everything was a security, even if you sold a baseball card, basically, based on their definition, to now nearly nothing's a security. And any meme coin, anywhere, any place, anyhow, is not a security. So we've gone from the tightness associated with it all the way to there's no tightness. And you know what? It's hard to describe, to be honest. And it's hard to keep your head on a swivel and be able to, adjust with a whiplash effect like that. It's one of the reasons why the broader markets are whiplashing in the way that they have. They're trying to make sense of
and I agree with you. You really can't make sense of it, right? It's kind of meme coins break all the traditional rules, and the platforms that launch them make launching them incredibly easy. So easy if you compare it to what we would call like an IPO offering. It's insanity. Like a 13-year-old can do it. So I start with number one, reality of what can be done. And you're not going to put this genie back in the bottle. This cat is not going back in the bag. The technology is here to stay. You're only going to see more of these, not less of them. And so the most logical thing I can come up with right now as a way to attack the nefarious actors and the projects that are just nothing but rug pulls, and quite frankly, in my opinion, a national security issue, because there's so much liquidity getting sucked out of the United States
Right.
users into these other countries, is to attack, go after the platforms. And there are strategic ways. Like right now, the platforms allow you to rug pull, encourage you to rug pull, make it very easy to do so. Whereas if you had a pre-prescribed mandated way where the developer had to issue, in this fair environment or with a set standard set of rules, that then if I wanted to open up some sort of Solana meme coin mint website, then I'd have to do it based upon these common set of rules. I think that's the closest that we're going to get to putting the genie back in the bottle.
Mhm.
And I think that that's probably the next thing to address, because if you have the ability to accidentally hit a button that rug pulls the community, and if you have the such a lack of instruction and clarity in the market to where Dave Portnoy will tweet the name of something,
Yeah.
and there'll be 15 of meme coins created with the exact same name. You don't even know which one's the real project because he didn't include a contract address with the name. So then you have all of these fraudsters that create, duplicate meme coins, and it takes the steam out of it. It really ruins, any organic movement that you could be a part of, because you don't even know if you're a part of the right one. And so there's just some standard stuff that, if we all played by the same rules, it could be fun. And it could be an elevated market than to what we have now. I mean, here's the good news, right? It's broken records. And when something breaks records in the world of finance, you have to stop and take notice. What records has it broken, might you ask? Well, Donald Trump on a Friday night at 9 p.m. sent out a tweet that created $75 billion of market cap in about 12 hours. Nothing's ever been done to that tune. And so the way I look at that is like it's a two-edged sword used for good purposes and used
Yeah.
responsibly. Let's say that was a means to raise charitable funds for disaster relief. You needed to raise them really quickly. You wanted to draw from a global audience,
Right.
and it was something that people could get behind. I don't see another mechanism out there. There is no other set of rails that would be more effective than that for that cause and for that use case. The use case of people tweeting funny things out and meme coins getting, created on the back of them to rug pull people with software that they've engineered to do so.
Yeah.
Yeah, let's tear down those walls and build new ones.
Yeah. It is. Check out the tweet that I had Alan post. SEC meme coins generally not securities under federal law. So I mean, that's the law of the land as they see it. And so my guess is that over time, we put ourselves in a position that relying on Congress to affect some sort of regulatory framework associated with crypto securities, let's call them, but do it in a way that is fairly inclusive as opposed to exclusive, which is what the previous regime was all about. But that's a slippery slope. It's a
Well,
difficult.
listen, if you make meme coins a security, then
Mhm.
you have to make every skin on Fortnite a security.
Correct. Right. Correct. And not only that, But you and I know, based on the age of our kids, that there are rare skins on Fortnite that you can go on eBay and purchase and get a code to, and you can get them
People
back.
sell accounts for millions of
Yeah,
dollars
that's right.
so that you get the
All the stuff.
season 1, series 1 OG
Yeah.
skin. This is no different than Beanie Babies in my youth, no different than baseball cards. It's just a digital version of that. And we're a gambling society, and these fake numbers of thinking that you can, here's where it's wrong. You can't win in the meme coin space unless you're incredibly lucky. And when I mean lucky, I don't just mean lucky in picking the right meme coin at the very beginning of time, but I mean lucky in the fact that, if you were in Doge at the beginning of time, you've ridden out multiple 90% drawdowns. Like you've had the conviction to be a Doge guy more than anything else. That's a painful existence. They deserve the money that they've made, and every second that they hold it, in my opinion, is a ticking time bomb that they could potentially give back everything that they've made. And so I'm always a realist when it comes to any type of investing or gambling or any type of anything that has to do with money. The money that's at stake is all relative to the lifestyle of the person that's risking it. And
Sure.
if you're worth 100 million and you've got 1 million at stake, it's nothing to you. But if you've got 1 million and you've got 1 million at stake, it's everything to you. So you have to size proportionate to your stack before you even get into any of this stuff, so that when the crap hits the fan, like it always does, like it is right now for a lot of people. I mean, if you had any leverage
Mhm.
anywhere in any market, you're flushed right now. You're
Yeah,
you're
you're having a difficult time. There's no doubt about it. And the fact of the matter is that liquidity and leverage are best friends, right? I mean, that's kind of how the markets work. That leverage creates additional liquidity, and liquidity it creates, generally speaking, over time, higher asset prices. So when we have these moments where the Nasdaq is down, let's call it 10 to 12%, the S&P down something near that same percentage. Well, that's great if you're just holding a position that has no leverage, but if you have some level of leverage, then that number is higher for you. And it just kind of is what it is. Same thing in the world of Bitcoin, right? That's why kind of the reality associated with smart folks in the Bitcoin space has never leverage or lend your Bitcoin. Folks that leverage and lend their Bitcoin, their Bitcoin is easily departed because of the volatility associated with Bitcoin, and we're seeing that play out literally right now. So the question then becomes: does fear or greed take over as an investor, or do you find ways to lean in to a drop in price and understand that your conviction level is the same as it was when you first entered? And you lean back into that conviction. You remind yourself of that conviction.
right, and might remind yourself of the conviction, and you're real with yourself about what the potential losses could be. And in the crypto space, you should, as a general rule of thumb, think that you can suffer 90% drawdowns, because that's been the rule, not the exception. Every cycle, every coin. I mean, Bitcoin's had it multiple times. Now, it's fun to say this cycle's different, and I do think it's different, but I also have bias, and I am a believer in Bitcoin, and I do see the adoption at an institutional level versus retail level, and all those things make me want to say this cycle's different. But realistically speaking, if history repeats itself, then we should be down testing, the last breakout points, which the first one's 75,000. So it wouldn't surprise me if we go and sweep liquidity down to 71. And even then, there's room to fall. I mean, if you go look at the chart, there's that massive parabolic move that doubled us in price from the 50s to the hundreds, and retesting those 50 levels. it's very enticing for big money to have an opportunity to double it in a short period of time. Like that's a home run for them, like a grand slam. And when it gets in the 50s, I would think that would be the primary thought of pretty much everyone out there that has a significant amount of liquidity on the sides. They're going,
Sure.
where else can I get a 2-for-1 in, potentially a couple of months, 3, 4, 5 months? And so I do think there's a pretty strong buy wall there.
Yeah.
But market psychology is what's driving all of this. It's like and who's dumping right now, I think, are people who have made a lot of money in Bitcoin, the OG holders that, they don't want to ride through the end of this cycle without being exceptionally wealthy. And that allows them the mental flexibility to create a sell window between 100 grand and 70 grand. And they just look at anything that they get filled in that area as being good.
Yeah, it's again, it's about conviction. And if you are, if you were convicted about Bitcoin at any point over the last 2 years, 3 years, 4 years, that conviction certainly shouldn't change. And this is opportunity. As Saylor said, volatility is a gift. It is opportunity. I will add that a guy like Tom Lee, who's an analyst and is on CNBC, Bloomberg. He's on all the shows all the time, and I really respect the work that he does and how he does it. And he's been right a lot about Bitcoin, and he said the same thing that you did. That wouldn't be surprised if he said this about a month ago when there was a dip into the high 90s, and he said, I wouldn't be surprised if we go to the 80s, and there's an outside chance that if things get a little squirrely, that we end up in the high 50s. And in that moment, people are like, what the world is he talking about? What? Tom, paging Major Tom? What's going on?
We were in a down channel. We were in a sideways, call it a bull flag, if you will, a massive down pricing channel from March all the way until October. And, when we broke out of that, the top of that channel at the time was right around $66,000. And the channel was from about, the depth of the channel was at 50K, 50 to 60, 66K was kind of the breadth of that channel. That was resistance.
Yeah.
That was huge resistance for a multi-month pattern. And it doesn't surprise me that if we go back and retest that and formulate support on the top of that channel, and if we do that, that means that the top of that channel at the time, that's between 60 and 70K, depending upon kind of where you want to count the breakout.
Yeah, well, here's to hoping that doesn't happen, but if it does, again, the opportunity is there, and what you'll see again is,
well, that's not the right prayer, Andrew. The right prayer is that we win Powerball tomorrow and the price crashes to 50. That is, what are you talking? That's the prayer. Okay, we get exponentially rich and the price tanks to 50 all in the same time frame, and then we can have our cake and eat it too.
Yeah, it's it's interesting. Sentiment and psychology is really something. So you can have Bitcoin be up, let's call it, just conservatively 80% in Q4 of 2024, and now it's down 25% in Q1 of 2025. People losing their minds.
If you have a run up of more than 50% in anything,
mm-hmm.
expect a 50% drawdown on the run up.
Yeah.
So, you're going to give back 25 points on that 50 so that you can build support at that mean pricing level and then go up from there. It's the zigzag, the ABCD.
Yeah. Again, it's a reason why, we titled this show Bitcoin and Market Psychology, because winning in markets is all about psychology. If you're able to stick with your convictions through the difficult moments, the shock moments, and also not get too euphoric in the moments where you're like, this is the greatest thing that's ever happened to me. Keeping a cool head in both of those moments, you end up as a winner. In the world of hedge funds, let's call it, there's a well-known thesis that has proven to be true. And the reason why the greatest investors of the world do better than everybody else is not because they buy at the lows. It's not because they've got some super cool strategy. It's simply because they hang on to their winners for much, much longer than everybody else does. And the truth of the matter is if you bought Bitcoin in September, you absolutely are up a significant amount. And the question is, do you sell because you're afraid you're going to get back to your cost basis?
You
Or
add to your
yeah,
winners.
or do you hang on for much, much longer than everybody else does? If you hang on for much, much longer than everybody else does, then you're going to be a winner to the tune of 2 to 3x everyone else around you. And that's what the Paul Tudor Joneses of the world do. That's what the Warren Buffetts of the world do. That's what the Steve Cohens of the world do. That's why they're the best at what they do, is they hang on to their winners much, much longer than the general public does. And to some degree, absolutely to a degree, they're competitors. And so
Well, and that's been true over the course of financial, history because of inflation alone. But that volatility and that velocity of inflation is ever expanding and increasing, which makes the volatility of the market. There's more cash injected into the market now than ever before, and that's going to always go up.
yeah, absolutely. So market psychology is what it is. Crypto Twitter psychology is what it is at this point. And it comes down to, where do you fall as it relates to fear and greed? Do you put yourself in a position where you've managed, your finances in a way where you have an opportunity to capitalize when the opportunity arises? Or are you gripped by fear and this could go lower and I've got to find a way to get out of this and never look at it again? That's when opportunity is missed. So I don't know, what else do we want to talk about here, Tillman? I don't know how long we want to do the show today.
Well, the only other thing that I find really fascinating is this Bybit hack, and number one, how quickly they recovered and were back up to full operations less than 12 hours afterwards. I don't. That can happen to anybody, but the whole community that now is coming together and saying that the Ethereum chain needs to be rolled back, I think is just one of the biggest mind-bending, potential real world events that could be on the horizon. And I don't think it would. I think it potentially would have great benefits for Bitcoin because there's a lot of market share that could be acquired in Ethereum kind of being, the curtain being pulled back on it from a protocol perspective. But, you can't have it both ways. Either it's decentralized or it's not decentralized. And if you're going to be included in talks about being a sovereign, included in the sovereign wealth fund and
Sure.
included kind of on the balance sheet of sovereign nations, it very well can't include a new Federal Reserve where the stakeholders of that protocol, including the foundation, are in charge of the protocol, in charge of that asset. Like that begs a lot of issues and questions. And so, the fact that most people that are in the crypto space don't even know the difference between the protocols, I
Yeah.
like when things like this come up because it provides a high educational point where people start to ask the question, like, I've a lot of people have asked me, well, can Bitcoin's chain be rolled back? And the answer is unequivocally no, it cannot. And the reason why it cannot is because it's truly decentralized. And so, the fact that Ethereum's can, it begs a lot of questions as to if Ethereum's can, what other chains can be rolled back? What other protocols? And here's the simple thing that, I think everybody should really grasp is that Bitcoin isn't a league by itself in that regard. There's only one protocol that's been fairly and equitably distributed through its inflationary curve by more than 90+% and has done so perfectly and done so in a fair and equitable manner. And that's Bitcoin. And so when you talk about the distribution curve of Bitcoin, it looks very different than any of the other coins that have ever been created. And that's why I think, as Wall Street starts to adopt crypto, there needs to be a hard look at if you're adopting crypto for its use case, great. That's what we can agree upon. So Bitcoin's use case is gold 2.0, store of value, hedge against inflation, not just
Right.
domestically, but globally. If you're talking about including anything else, you need to prove to me that it has a valid use case and it can't be the same as Bitcoin's because it wasn't created the same as Bitcoin's
Yeah.
and it doesn't have the same decentralized properties as Bitcoin's and it's not through its inflationary curve by more than 90%. There's just a ton of differences. And so, when you're talking about Ethereum or any other coin being, quote, added, the question then in my mind and in everyone else's mind should be, what does it do? What problem is it really solving?
Mm-hmm.
And if you ask that question today about Solana, what does it really do? What is the problem it's solving? Well, it's created the most wild, wild west casino that's ever been
Yeah.
created. So there is a baby in the bathwater, but we got to figure out how to sort. I mean, should Solana be included in the strategic national reserve or be owned by sovereign nations just because it's a tech that made it easy to gamble for kids on Twitter, on
Yeah.
Instagram?
Yeah.
No, it shouldn't, right? And so this is the great fleshing out that we've always wanted in the space. And it's going to be done by outsiders that don't have a dog in the fight based upon how much money they've made on each protocol, but truly on like what can it do for the world, So I find it to be incredibly fascinating and exciting to watch it happen in real time at such a fast pace. I mean, it's insane.
Yeah, absolutely.
Yeah.
Well, that's going to be it for today, folks. Thanks for joining us. Listen, if you had conviction about Bitcoin 2 months ago, 2 years ago, 4 years ago, you should stick with that conviction. Volatility is an opportunity. It's a gift. And so treat it as such. But also be careful out there. Don't ever leverage or lend your Bitcoin. Don't ever leverage or lend really anything. Stay smart out there, but take advantage of opportunity. That's what the big boys are doing right now. The big boys are taking advantage of opportunity. Any dip in an asset that they see as an asset that over time, again, I come back to Larry Fink, 500 to 700K. That's a cattle call for all of his big pocketed buddies to be involved. So they're loving this dip. And so that's us signing off. We'll be here next week. Stay safe.
Yep. Simple thing you just said I got to end on is, if you put 20% of your allocation, your cash allocation over the next 4 years into an asset that 5X's, then you've doubled your income.
Yeah.
With 20% exposure. So, little fun math. Yeah.
All right, folks. We'll see you later.
See ya.